Hello and welcome back to Stock Market Weekly. I'm your host, Evan Medeiros, and we finally got a little bit of volatility out there. We get a little bit of a shakeup under the hood there in the stock market this week. Very minor, still very contained, but we're going to talk about that action this week. We're going to talk about some of the sectors that held up a little bit better. We're going to look at some trade ideas. So let's get into it. Hope you're doing well. Thanks for joining once again every single weekend. And our sponsor of the show is Investors Business Daily. They're a longtime sponsor. Check out those links in the description of this show. Two great products, IBD Digital and their Market Surge. Once you're done with this video, we've got introductory offers for Trade Risk subscribers. So do take advantage of them. And now let's get into this week's headlines. So we're going to give Powell, I guess, the credit here on some of the weakness that we saw at midweek. Jerome Powell was out kind of talking maybe down the rate cut and some of the comments that he made last week when the Fed cut rates. So this week he was kind of out on a presser here talking about the fact that valuations are high, that the Fed is going to remain data dependent. They're not locking into more future cuts. And so giving basically this back and forth, this yin and yang that we see all the time. This really isn't new, but of course, it's an excuse for the market to sell off, and the market's been very kind of just steady, rising, grinding, looking for that excuse. And I think this was part of it this week. So we had a little bit of softness coming in from Powell, but then we had on Friday, the end of the week here. It wasn't all bad. We didn't end at the lows. We got a little bit of a rebound here. PCE kind of coming in line to analysts' expectations, basically now kind of thinking, okay, Jerome Powell, you said you're going to be data dependent. Here's some data. You've said that you care about PCE. Seems like it's in line, and it seems like you are clear for cuts. The big econ report is next week, though, which will be jobs. Government shutdown. That's here again, right? We always get right down to the wire. That's what it is. The media is going to make a big presser and bunch of scary headlines about it. The last time the government shut down, ironically, was President Trump. I think this was back when they were fighting for funding on the wall and building the wall. And it could happen again, right? We could get another shutdown here. There's lots of threats being escalated, but generally speaking, these things tend to resolve themselves at the last hour or maybe 1 hour into it. We shall see, but this is going to be the end of September. I think it's the October 1st. The government would technically shut down if the budget does not get raised. And TikTok, I don't have too much to say about it, but finally we got an executive order out, and Oracle is going to be the majority sort of owner here of TikTok, and that stock's been in the news now for a few different reasons, but it continues to basically become a more and more relevant stock, even though Wall Street and retail doesn't seem to care too much about it. All right. Energy was a good spot. I don't think I was supposed to have this slide here, but we'll talk about it now anyway. Energy was a very resilient spot. I think this was supposed to be later in the presentation, but we're going to roll with it here. This was one of the more standout ones. Let's get my pencil out, and you can see that there was some damage out there this week. There was a little bit of a shakeup, but energy was not the spot that occurred. And I did post this earlier on the week here on the socials that XLE was a good spot to kind of hide out. This was the performance this week across the board. So it was red, but it was off the lows. So we were deeper red, basically Thursday at the lows, I think was the worst of it. And we did get, from a high to low, about a 2 to 3% pullback in the major indices, which is kind of what you're getting now around this time. So this was the SPY from the action, and you can see basically all the way down, and then we got that nice little pop and rebound on Friday. I should have a chart here. Yeah. So here's the S&P 500. This is the SPY. So we topped out basically coming into this week, and Thursday's lows down just sub 655 proved to be about a 2% correction here in the S&P 500. And we can laugh, and I smirk as I say that, but that is, historically for 2025 post-April has been kind of the extent of the shakeups here in the S&P 500. It is these quick 3-day rally, 3-day declines. That tends to be the extent of the pullback. Obviously, there are individual stocks that are suffering bigger declines, but in terms of the market cap weighted big behemoth in the room, this is kind of what you get. And so on Friday, we did get the PCE data out. But again, I'd say a little bit of an oversold condition on the short term was enough to pop us. NASDAQ 100, kind of the same thing. I mean, this got just over 2% of a pullback. And the NASDAQ, to its credit, it has been pulling back a little bit more than this. So it's been more around the 4% range this year. So this was a bit of a shallow pullback here for the NASDAQ 100, but, we still got the 3 days down, kind of a hammer on Thursday, and then some follow through on Friday. Trend is up all around the board. So we'll see if we can just pick up the buying into the end of the month of September, right? And September is seasonally a tricky time. And then the end of the year tends to be a good spot. SMH, this is the semiconductors. This probably explains why tech held up pretty well. SMH was very resilient. In fact, you could see almost a full turnaround here on Thursday already. So basically negating and driving off of these lows, and a little bit less follow through, I guess, on Friday. But generally speaking here, semiconductors, which is a leadership group, it's an important group. It's a, heavyweight growth area right now. And so you do want to pay attention to this. And if this is still, holding above 10 period, 20 period, 50 period simple moving average, then that there's still some good support in this market. Let's talk about the VIX. It was kind of choppy and up throughout the start of the week, and then it kind of sank down to its 15 area, where it really does like to hang out recently. So you can see that anytime VIX gets into the low to mid 14s, it tends to find itself a bid, and then it gets kind of sold off into the 17s. This has been the pattern now for the past month or so. Eventually this will change, but for now that's the regime that we're in. And we did just get through OPEX, so we're going into another cycle now. Here's the US dollar. It is catching a bid. So the lows was basically the FOMC meeting. So when the Fed was cutting interest rates, we saw interest rates basically find a low. Wait, I'm thinking dollar. Dollar finds a low. Interest rates here also, catch a low and start to rise. So both of these things, which they are correlated, right? You would expect dollar rising and 10-year treasury yields rising. Once again, we're going out into the week now at 4.19. This is still in a downtrend. You don't want to see it, keep climbing here. You don't want to continue to see a full-on reversal of all of August and July. But I would say you're still in the realm of downward sloping here for 10-year treasury yields in general, and the dollar will give us some clues to that as well. So something we'll want to keep an eye on. In terms of the sectors here, so the energy slide we talked about at the top of the show, supposed to come after this, but XLE right here up 5% this week. This was getting all your outperformance, but so was utilities and real estate also having a good week. Most other things were in the red. Materials were hit the hardest. That chart's starting to look pretty sloppy. If we look at our smart trend filter indicator, we've got 4 sectors that are shining in the green here: energy, tech, utilities, communication services. You got 4 here in the middle of the pack, which is showing kind of yellow neutral signals for us. And then you still have consumer staples, which are a terrible spot over the past month or so. Healthcare is now joining the downward slope, and so are materials. All right. 52-week highs and lows. This is a little bit concerning, right? Because it was a 3-day shakeup. We talked about how these things are kind of normal for the market cap weighted indices. But take a look underneath the hood. Take a look at the 52-week lows that were made. Again, these are very contained, mild numbers. We're talking less than 100 stocks in the NYSE. So it's not a big alarming number, but just take a look at this trend as we've got it displayed here on this chart. So basically the last 2 months of trading, last month of trading, frankly, you can see that we've just got an upward drift on the number of stocks hitting 52-week lows as we're hanging out towards highs. And then the number of 52-week highs is just kind of going sideways. So this isn't the relationship you want to see, right? You want to see more of the upward sloping on the left-hand side and more sideways on the right-hand side. So we're going to want to pay attention to this. This is the only, not the only, but this is one sign of cracks where this pullback pullback is slightly different than some of the others, right? We didn't quite see, the separation here. Percentage of stocks above a 20 SMA. So we're getting back down to, oversold territory. So this is typically where you tend to find bounces, especially in this type of year. So this is, again, resetting underneath the hood. The big heavyweights are propping up indexes, but it shows you that there is some weakness out there underneath the hood. And not too much to say about the put to call ratio. Bitcoin struggled this week. This was a very disappointing week here for bulls. I was getting more optimistic about Bitcoin last week, talked about how some of our signals are starting to re-engage. Well, a lot of the wind came out of the sail this week. And so we broke back down, below 115 and then kind of sank down to 110. So this is, again, I've been saying for a while, 110 is a good area that I want to see Bitcoin stay above. We're back below it. We're teetering around it. So it's not giving me the most exciting action here. 107.5, that's where we found some support in early August. I'd say if you're a Bitcoin bull here, you want that line in the sand to hold. And so that's kind of the penalty box that Bitcoin finds itself in. I think if you want to get more optimistic about it, you got to break over 112.5 and then start to reclaim that 115 area. Silver, no problem catching a bid this week. Silver in the metals. I mean, this is a historic year for gold. At the top of the list, but now silver is quickly catching up. Not quite all-time highs. I think these are multi-decade highs. So congrats to the silver bulls. I have no silver exposure. Lots of gold exposure, but no silver, and it was working this week. So the big story, the big headline for next week is going to be jobless claims, the unemployment report. So we're going to want to pay close attention to that. Fed says they're going to be data dependent, so let's pay attention to the jobs report. Let's take a look at our trading systems here. So I should have the performance up to date next week for our Galahad trading system, but our, all-weather portfolio here is still pretty invested across a variety of assets here, still 135% gross exposure. So it's been a good year for this trading system. Still remains lots of its long exposure and nothing really changing there. In terms of our tactical swing system here, this is got no short exposure on. It is primarily just holding cash and some long exposure, right? So about 50% long, 50% cash. So pretty moderately invested. As the market started to pull back this week, it started to pick up some extra buy signals and it's going into the weekend basically as long as it's been in the past, 10 days, let's call it. So we'll see if those setups continue to come through. Now I want to talk about our momentum trading system here. This is our Quant Rockets. And so this recently is finding some exits across some of the names it's been holding. So this was a trade that it held in ALNY. 99-day holding period. So this was from right at the end of April. This has been in a smooth kind of grinding up trend, but it finally got punted out of our trading system here this week to start the week. So this was a 76% performer, massive winner. Really had to be patient and sit on your hands and just not touch anything. That's the hardest part, of course, right? But this is the recent 10 trades that it's closed out, our Quant Rockets momentum list. And so you can see there's lots of red here, right? Loser, 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 9 stocks. Thought I grabbed 10. But then take a look at the 2 winners here, right? This is the type of ratio you want to see in some type of momentum system, right? Where you're losing more, right? But as long as the losses are contained, -1%, -1%, -10, -1, and then you pick up a 76% winner, a 23% winner, that's how you create an edge and you, build that opportunity over time. So this is a momentum driven market. This Quant Rockets was made for this type of market. It is pulling in some big aggressive gains and winners here. One stock that I'll highlight for you before we close is MRVL. So this was an entry here on Quant Rockets. Picked it up at 74.75 at the start of this week. It's up 11%. Had a good week. I think this was the top performing stock this week, or maybe the second best. It was in one of the top 3 though. So that's it. That's what I got for this week. If you need some structure here on that momentum trading, I encourage you to check out Quant Rockets because it gives you a rules-based process to stay on top of these fast-moving stocks. And we are going into nosebleed territory, right? And you don't want to stay sidelined. You want to have rules in place, right? You want to have exit and stop losses in place. And so that's what this type of framework is, what all of our trading systems do, right? So we got links in the description of the show. But to do a quick recap here on just the market and going forward, this still feels like the hardest trade is to stay long, is to stay invested in this market. Yes, there are some signs of cracks, right? We are seeing some things we don't like underneath the hood, those 52-week lows starting to inch up, right? But as long as the big narratives can continue to hold this market in place, right? The AI growth trends and mostly that, to be honest, at this point, right? But lots of the, margin improvement across individual stocks. I mean, if these narratives can stay in place, if this momentum and sort of animal spirits kind of all kind of push and fuel this market in towards the end of the year, which is usually the seasonally kind of bullish, strong last couple of months, then we say that we should be looking at opportunities to stay long. That can change. It will change at some point, and so we'll continue to monitor that. But all of the data collectively here still shows some things that we want to be sticking around for. And that doesn't mean that we can't still see another week of chop and sideways or down, right? Maybe the market doesn't springboard immediately back up to all-time highs next week. Maybe we actually, do a little bit of a lower high and we make a 4 or 5% kind of pullback in towards the end of the year before we get another dip buying opportunity. That's very reasonable, right? And it doesn't negate the bigger story here. So as always, the paths are infinite. We'll just continue to track and monitor the data. Thanks so much for spending your time with us. Every single Friday, we publish these episodes. So hopefully you enjoyed. Thanks so much. And we'll hope to see you back here in a future episode. Take care.